to present these modules to the students. I'd like to thank the library and Dr. Volk and the college for allowing us to do this. I am Terry Boffman. I am Vice President with the Bank of San Juans.
Good morning. I'm Stacy Harner, and I'm a branch manager for Bank of the San Juans. So today, let's talk about some things that we're going to learn, and hopefully by the end of this course that you'll know. So today we're going to track daily spending habits, prepare a personal spending plan or budget to estimate monthly income and expenses, identify ways to decrease spending and increase income, and identify budgeting tools that will help you manage your money.
Man, I ran out of money again. I can't even go get pizza with you.
You should develop a spending plan. You can see where you spend it all, and maybe save some.
I can't even make a bowl of cereal. How am I going to develop a spending plan? Well, Stacy and I today are here to help you with your spending plan. So let's get started. In your workbook, you're going to have a pre-assessment. And what we'd like to do is go through this pre-assessment just to see what you might already know about setting financial goals. So go ahead in your packet and let's get to the pre-assessment. We will read each one of the questions and the potential answers. We'll give it just a few seconds, and then we'll give you the answer to the test, if you will. So let's go ahead and get started. Number 1, select all that apply. Your financial goals should be A, realistic, B, aligned with a time frame, C, organized by milestones, or D, open-ended and flexible. And the answers are A, realistic, B, aligned with a time frame, and C, organized by milestones.
Number 2, the main reason that it is helpful to track daily spending habits is to A, enter them on a computer worksheet, B, know exactly how your money is spent, C, increase your income, D, decrease your spending. And the answer is B, know exactly how you spent your money.
Number 3, before you prepare a spending plan, the 2 most important things you must know are A, total income and expenses, B, your car payment, C, how to plan for savings and food, or D, what you spend on your phone bill and movies. And the correct answer is A, total income and expenses.
Number 4, which of the following are generally considered examples of a flexible expense? Select all that apply. A, a car payment, B, car insurance, C, a cell phone bill, or D, personal expenses. And hopefully you picked C and D, a cell phone bill and personal expenses.
Number 5, which of the following are generally considered examples of a fixed expense? Select all that apply. A, car payment, B, car insurance, C, personal expenses, and C, cell phone bill. And the correct answers are A, car payment, and B, car insurance.
Number 6, adopt the habit of paying yourself first. On your worksheets, list savings as A, a fixed expense, B, income, C, entertainment, or D, a flexible expense. And the answer is D, a flexible expense.
Number 7, increasing cash flow means A, you must get a part-time job to fill up free time, B, getting money from the ATM, C, borrowing money from a family member, or D, lowering your expenses so you have more money at the end of the month. And the answer to increasing cash flow is D, lowering your expenses so you have more money at the end of the month.
Number 8, on a pay stub, deductions made for Social Security are often referred to as A, SSD, B, FICA, C, retirement, or D, Social S. And you would be correct if you picked B, FICA.
Number 9, Social Security benefits may include A, retirement benefits, B, disability benefits, C, survivor benefits, or D, all of the above. And the correct answer is D, all of the above.
And number 10, on a typical pay stub, net pay, sometimes referred to as take-home pay, is often smaller than A, total Social Security deductions, B, your gross pay, C, overtime hours, or D, bonus pay. And the answer would be B, gross pay.
Number 11, if you earn $10 an hour at a part-time job and you work 16 hours in a week, your take-home pay for that week will likely be A, exactly $160, B, slightly more than $160, C, less than $160 due to deductions, or D, automatically deposited. And the correct answer is C, less than $160 due to deductions.
And number 12, if you are having trouble paying your bills, you should first, A, try to increase the limit on one or more of your credit cards, B, talk to a payday lender to get some extra cash, C, talk to a parent or guardian, or D, stop all payments. And the answer is C, talk to a parent or guardian.
I hope you did a great job on those pre-test questions. The goal, of course, is to make sure that you have some idea, possibly, about setting financial goals. And so that's the reason for doing that exercise. If you got them all right, that you're a superstar. You could probably just teach this class. But we hope that there's some areas that you might have some areas that you can improve on. And that's what we're going to do today, is really help you to put together an idea and some very good ideas on how to set financial goals. So let's go ahead and move over to workbook page number 9. What is a spending plan? A spending plan is a step-by-step guide for meeting expenses in a given period of time. And so as we talk about those and we're looking at our financial goals, some things that we need to really be considering is be realistic. Be specific. Have a time frame. State the action to be taken, and have milestones. So let's talk a little bit more about that in detail. But first, we've got another cartoon. Man, I ran out of money again. I can't go get pizza with you. Oh, I'm sorry. We just did that. So forgive me. Just ignore that little piece. So let's go into financial goals. I'm so sorry. So when we're setting financial goals, it will help if you create and stick to a spending plan. Consider your goals when creating a spending plan. So let's talk about those specific bullet points that I just mentioned before. When we talk about being realistic, a student working part-time is not likely going to be able to afford a new car every couple of years. So again, be realistic with your financial goal setting. Be specific. I plan or want to save $5,000 for a down payment to buy a new Honda Civic. So make sure that you're specific about what that plan is and what the reason is for that savings for that item. Have a time frame. I plan or want to pay off my credit cards within the next 12 months. Again, making sure that you have a time frame and a set time period for those expenses or to pay off a specific debt like this example. State the action to be taking. I will ask my bank to transfer a certain amount of funds from my checking account into my savings account each month. So when you're looking at this as a savings idea or part of your financial savings, this is where you can speak to your banker and say, you know, I get paid at the first of every month. I want to put aside $25, and that way you won't even miss that money. It's money that's going to be set aside for your specific item like the car that we just talked about. And then have milestones. For example, this talks about buying a bicycle for $800, but maybe you want to buy a car, maybe you need a new cell phone or some other expenses. Make sure that you have some milestones, and every couple of months, just kind of check in on those milestones and make sure that they're still realistic for your plan. How many of you currently track your spending? I can tell you that there was a time in my life that I didn't track my spending. And once I realized that this really is a tool, and as we talk more in the module today about the different ways to do that, it was really helpful for me to stay on track with my expenses. I actually started saving money, and that's the goal here as well. So we'll go through those specifically. Have you ever had cash and then can't remember where you spent it? I promise all of us have been in that scenario. We cash our paycheck, we might put $200 in our wallet, and then before we know it, by the end of the week, we don't even remember where we spent that money. So we're going to really work on a plan to make sure that you understand where every single dime goes so that you're clear on those expenses and the income that you have every month. And then make sure that you prepare a spending plan. We'll talk about these. So keep track of your daily spending. This is really important. Every expense, no matter how little or how big, has to be put into your spending plan in order for it to work. 2, determine what your monthly income and expenses are for the month before they're due. Find ways to decrease your spending. Find ways to increase your income. So now let's talk about step 1, how to keep track of your daily spending. It's really important for you to understand the difference between a need and a want. And I know we all know what that is. There are many things that we really consider to be something that we need, but we have to be realistic when we're looking at setting financial goals on, is this really a need or a want? I remember teaching JA classes for many years, and one of the 5th grade classes that I would teach talks specifically about needs and wants. So I know that many of us have understood this from a young age, but it's really important when you're setting financial goals to make sure that you really understand need and wants. It's going to be extremely important for setting those financial goals. Again, do you know where your money went for the month? To control your money for the month, understand where your money goes and keep a personal spending diary. And we're going to talk about some different ways to do that, keeping those specific diary on your spending. On workbook page 11, we have a daily spending diary that we're going to talk about. And this could be a tool for you to make sure that you're tracking your daily and monthly expenses. So we're going to write down what you spend in a typical day and use the daily spending diary to keep track of everything you spend. Here we go on activity number 1, our daily spending diary. So this is an example of how you can track those daily spendings. Be sure that, like I said, to write everything down, no matter how small those are. So Stacy, let's give them some examples of how we can track our daily spendings. So for instance, I'm going to give an example that on Sunday, I go buy groceries.
On Monday, I put gas in my car, and I also have a lunch date.
On Tuesday, my favorite day, I go get Starbucks.
On Wednesday, I buy donuts for my staff.
Thursday, another favorite day, I go get a nail appointment.
On Friday, I have another lunch date with a friend.
And Saturday is dinner with family, and we have pizza. So make sure that you take some time to use this as a tool for your daily spending. You'll be surprised how much is going out into expenses that might not be a need, but a want. So make sure that you take a look at and use this as a tool. I would encourage you to start doing that right away, just so you can start kind of evaluating what your daily spending diary looks like. All right, let's look at step 2. This is an area that we're going to determine income and expenses. So income is money that comes from various areas. For instance, maybe it's a job, an allowance, maybe interest and dividends. And we're going to talk about some of those ideas later in some of our modules. And then other sources of income. And that could be maybe you do some tutoring or lawn mowing. Maybe you do some babysitting. And don't forget, tips are another income. So you might pocket those tips and not remember where they're spent, but make sure when you're tracking expenses that you're including those tips, because that is income. And you want to make sure that you know where that money went. When we talk about expenses, those are items you spend money on. So bills, transportation, entertainment, maybe movies, clothes, makeup, cologne. Those are additional expenses that we want to make sure that we're tracking. Let's go ahead and look on workbook page number 13. This is activity number 2, where we're going to talk about monthly income and our expenses worksheet. So we're going to enter the income source and the income amount and calculate with the total income. So again, Stacy and I are going to get our heads together here, and we're going to talk about some of our income that we might have as a student. So as you look at the little box where it says my income and my expenses, you want to make sure that the first line is income sources and the second column is for the amounts of those income sources. So for Stacy and I, the first thing I'm going to jot down on mine is I do some babysitting and I get $100 a month for that.
I do some tutoring and I make $55 a month on that.
I'm a waitress and I get $225 a month.
And being a waitress, I earn tips and I make $125 a month.
And remember, I said you have to count your tips as income. So don't forget, even though it's easy to take that $25, $50 a night and just put it in your pocket, you need to start making sure that you're accounting for those tips. It's really important to make sure that you're tracking those dollars. And then lastly, I took up a dog walking and I get about $35 a month. So when we look at the monthly income between Stacy and I, our total income is $540. Now let's talk about the expenses for the month. So remember, fixed expenses are expenses that we really don't have any wiggle room on, sort of. We'll talk about that in detail as well. So the first thing is our car payment, car insurance, loans and credit cards, and then $25 that we put into savings. We want to call that savings money our fixed expense. And the reason is because, and we'll talk about this in the next module, is you're paying yourself first. And what that means is you're setting aside some money for your savings, for your future. So make sure that you do that. That should be a fixed expense, something that you do every single month. Next, we're going to talk about flexible expenses: gas, car maintenance, your cell phone, entertainment, and personal expenses. So when we take a look at our total expenses for the month, our total is $270. Ironically, between our income that Stacy and I just kind of put together and our expenses, we have an extra $270 a month that we could put away for savings, or we'll talk about some areas where we can maybe pay off some loans quicker and do some additional things with that. So remember to plan for income and expenses that do not occur on a monthly occasion as well. So maybe, for instance, you get a flat tire and you got to buy a new tire, or maybe you have to just fix that tire. Maybe there's an additional expense with a book at school. So make sure that you're looking at some additional expenses that may not be on your expenses worksheet, but that might just come up during the month, because it's important that you're saving and thinking about those ahead of time as well.
All right, so let's talk about what you really earn. Gross income versus net income. When creating a spending plan, remember that your employer has to subtract certain taxes and other deductions from your paycheck. So your gross income minus your deductions is your net income. Some deductions include federal and state income taxes, Social Security taxes, retirement savings contributions, or possibly a premium for medical insurance. In your workbook, there's also a page that talks about your Social Security benefits. Let's break that down. This is also called FICA, Federal Insurance Contributions Act. Some of those benefits include retirement, disability, family, survivor, or Medicare. And these are all based on certain factors such as age and other criteria. In your workbook on page 15, there's a pay stub for Grace. Let's break that down and see what she actually earns. So you can see her hourly rate of pay is $10 an hour. She's worked 16 hours. Her gross earnings are $160. Then her employer has to take out deductions. So her federal income tax deduction is $20, her state income tax deduction is $750, Social Security or FICA is $9, and her Medicaid is $2.40. So her net income is only $121.10. So when we're talking about how much money we actually make, we need to figure out what our expenses are. Fixed expenses do not change from month to month. Example, your car payment, your rent, or your savings. Flexible expenses might change from month to month. Example of that would be your electricity, food, clothing, and entertainment. So how are some ways that we can decrease our spending if we don't have enough money to pay for everything? For instance, we can carry only small amounts of cash in our wallet and limit our spending to that amount. Avoid or limit your use of credit cards. Avoid shopping just for fun. Take your written savings goals with you as a reminder. Determine whether you purchase is a need or a want and only buy what you need. Pay your bills on time to avoid late fees and extra finance charges. What are some ways to increase our spending? Other than finding a job or finding a job that pays more, what are some ways that you can increase your income? You could do side jobs, such as becoming a notary. They can pay $75 to $200 and work on your own schedule. Tutoring is another way. You can sell stuff that you don't need anymore. These are all ways that you can increase your income.
Let's talk about some planning tools. Again, let's take a look at the monthly payment schedule, the monthly payment calendar, or the computer system. These are going to be some different ways that we can actually use for our planning tool. Let's talk about these a little bit more in detail. So Stacy mentioned a little while ago about looking for some additional income with some additional jobs, maybe tutoring, maybe doing some extra jobs on the side. So when we're looking at budgeting tools on page 17, we want to make sure that we're really using a tool to track our expenses. So the monthly payment schedule helps you plan in advance what you will pay for your bills. So this is going to be a great tool to understand what your monthly expenses are going to be. It lets you record them in advance, and that way you'll make sure that you have enough to pay for those bills. Let's take a look at activity 4 on your workbook, page number 17. We're going to talk a little bit about the expenses, and we're going to transfer those at the bottom of the page. So you can see on the top, it's got a list of all the expenses for the month with their due dates. So this is as if you have all your bills together and you're ready to put together your monthly spending plan or your payment schedule. So let's get started. The first thing that we have is we have our take-home pay that happens on 4/1 for $425. And we have money that we put into our savings automatically from that payment of $25.
We have a car payment on 4/1 for $150.
We have insurance on 4/1 for $300.
We have gas for our car on 4/2 for $60.
Personal expenses on 4/3 for $25.
And our cell phone bill on 4/3 for $30.
Our credit card bill on 4/20 is $10.
And we can't forget about entertainment on 4/28, $40.
So our total expenses are $640. So now let's take a look at another tool. And this is a tool I really enjoy and I like to look at. I'm kind of a girl that likes to see the overall picture. So this really helps me to use a calendar for my tool tracking. So let's look at workbook page number 18 for activity number 5. Here's where we're going to take the exact expenses that Stacy and I just talked about, all those bills and expenses that you have for the month, and we're going to list it on the calendar. So for instance, the one thing that you may notice as you were completing this based on the information we just talked about is we get our paycheck on 4/1 for $425. We put $25 of that into our savings. We need to pay our insurance, and that's $300. And our car payment is $150. If we add up our expenses on just that one day, it's $475. Don't be concerned. Here's what you need to make sure that you're doing. When we look at a monthly payment calendar like this, you're going to need to make sure that your expenses are spread out throughout the month. So even though you have a big chunk of your expenses that are due on the first part of the month, and you get paid on the first part of the month, you need to make sure that you carried over some of your money from the previous month, or maybe you got some extra income that you can add so you can make sure that you can pay those expenses. You can see throughout the rest of the month, there's minimal expenses that you have. So making sure that when you're using a tool to pay your monthly bills, that you're making sure that you have enough for the whole month. And if it means you need to save some from your previous month to carry over so you can pay your expenses, make sure that you're doing that. This is a great tool and just an example of a way to track those monthly payments. So let's take a look at what happens if I cannot pay my bills. What payments should you make first if you don't have enough money to pay your bills? I think it's super important that you really look at this, because as we talked earlier about needs and wants, there's some specific things and areas that you can look at here. Absolutely, the priority, as we looked at some of the examples previous, are our car payment so we can get to work, our car insurance, of course, because we've got to have insurance, and then probably our cell phone bill. But we just need to manage that as well. So think about the bills that would be the most important that you currently have, because those are the things that you may need to make sure is a priority and that you get those things paid monthly. And we'll talk about why that's so important in some other modules. So what happens if you can't pay your bills? Talk with a parent or a guardian or another adult you can trust. Pay your necessary expenses first, and that's key. Get it out of the way. Just go ahead and get those paid. Pay off loans with the highest interest rate first to save on interest. And we'll talk about that later in the modules as well. It's really important to understand those kind of payments and how to get those payments paid off quickly. Talk to your creditors as soon as you can. If you're having a problem making your payments, reach out to your, maybe it's the rent. Maybe they'll let you pay half this week and half next week. Maybe it's your car payment. Maybe you can do a skip a payment on your car payment. Insurance probably isn't one that's going to give you very much flexibility, but make sure that you're discussing some of those options with your payments so that you can see what you can do and make sure that you get those things back on track. Let's take a look on workbook page number 20, and we're going to talk about Todd has a hole in his pocket. And let's figure out how we can help Todd make up for this hole that he has in his pocket. So here's the deal. Todd gets an allowance. He does some chores around the house, and he earns $100 a month. His cell phone bill normally is $30 a month. The rest of his money goes to savings, $10 a month. He goes out with friends, that's another $25. Clothes, MP3 downloads, and video games, that's $35 a month. And right now, he has $70 in savings. So it sounds like Todd probably has a good handle on it. But uh-oh, this is what happens. Last month, Todd got a little crazy and went over his allowable minutes on his phone. I know every one of us has done this. You're not thinking about it, you're not paying attention to it, and before you know it, your cell phone bill is increased from $30 to, $256 for Todd. This is not good. So let's take a look, Stacy. Let's figure out how can we help Todd get back on track with this. Let's develop a spending plan. So first off, the first thing maybe we could do is, how about, Stacy, we just don't put any money into savings this month. That's going to be $10. How about he's not going to go out this month and have some going out with his friends and save $25. And then clothes and download and video games, that's another $35. So right there is another $70 that are not needs for Todd that we can set aside to try to help get him back on track with this cell phone expense he suddenly has. On top of that, remember, he has $70 in savings. So at this point, he has $140 that he can put on that cell phone bill to try to get him back on track. So again, just make sure there are going to be bumps in the road, I call them, where expenses either come up that you weren't expecting or you weren't paying attention to your cell phone minutes and you went over. So be aware of that and look for ways to cut back some expenses so you can get yourself back on track. It's important for that, for sure. All right, Stacy. Wow. Making a spending plan seems easy enough.
Just remember to keep receipts and write down all of your expenses.
Hey, can I borrow $5 for pizza?
if you let me help you plan to pay it back.
Good idea. I like it. All right. Congratulations. You've completed the Setting Financial Goals module today. Here's what I hope you learned: how to track what you spend each day so you know exactly where your money goes, how to prepare a personal spending plan to estimate your monthly income and expenses so that you don't run out of money at the end of the month, ways to decrease spending and increase income to help you manage your money, which tools you might use to manage your money better. So make sure we hope that you learned some things from this. And like everything, there's a test. It's not really a test. It's just kind of a knowledge check on what you learned today. So let's turn to the back of your workbook and take a look at the knowledge check. Again, at the beginning, we did sort of a pre-test just to see, maybe give yourself an idea of what you learned. This is a knowledge check to see what you did learn. So let's go through and do a run through on this. Number one, your financial goals should consist of what? Select all that apply. A, specific information. B, milestones. C, actions to be taken. And D, items you want to purchase. If you learned something today, your answer would be A, specific information. B, milestones. And C, actions to be taken. Number two, you will be more likely to do this if you track daily spending habits by A, reducing deductions from your paycheck, B, working more hours, C, purchasing a larger number of items, or D, understanding how your money is spent. I bet you got this one right. It's D, understanding how your money is spent. Number three, you cannot prepare a personal spending plan without first knowing these two things. A, your total income and expenses. B, your address and zip code. C, your overtime hours and vacation pay. D, your savings accounts, interest rate, and fees. You had to get this one right. It's your total income and expenses, A. Select all of the flexible expense items from the list. A, personal expenses. B, monthly car payment. C, cell phone bill. D, savings. Remember, we talked about this. Flexible expenses are A, personal expenses, C, cell phone bill, and D, savings. Number five, select all of the fixed expense items from the list. A, monthly cable television bill. B, savings. C, personal expenses. And D, monthly car payment. The correct answer would be A, monthly cable and television bill. Number six, you can pay yourself first by listing this item as a flexible expense on your worksheet. Remember, flexible expense. A, clothing expenses. B, entertainment costs. C, savings. Or D, tuition fees. The correct answer would be C, savings. Number seven, if you increase your cash flow, then you have A, agree to work no fewer than 4 hours of overtime each week. B, lowered your expenses and increased the amount of money you have at the end of the month. C, doubled the amount of cash you were able to access from the ATM. Not sure how that would work out. And D, arranged for your boss to pay you twice a week instead of once a week. If you can make that happen, please let Stacy and I know that. So the correct answer on this one would be B, lowered your expenses and increased the amount of money you have at the end of the month. 8, when you see the acronym FICA on your pay stub, it refers to deductions made for A, state income tax, B, your local plant a tree program, C, Social Security, or D, federal income tax. And the answer is C, Social Security. Number 9, Social Security benefits do not include A, retirement benefits, B, employer-funded pension benefits, C, survivor benefits, or D, disability benefits. This one is B, employer-funded pension benefits, and we will talk about this in some later modules. Number 10, gross pay on your pay stub is usually the larger amount when compared to what other items? Select all that apply. A, year-to-date earnings. B, federal income tax deductions. C, net pay. Or D, FICA deduction. And the correct answer is B, federal income tax deduction. Number 11, if you work 10 hours in a week at your part-time job and you earn $8 an hour, your take-home pay for that week will likely be A, slightly more than $80, B, withheld until you earn at least $100, C, less than $80 due to the deductions, or D, exactly $80. I know Stacy helped you with this one. Your correct answer would be C, less than $80, because remember there's all those deductions that happen. And our last question, you should do this if you are having trouble paying your bills. A, talk with a parent or guardian. B, ask close friends to loan you some money. C, stop paying them until you have saved enough money to continue. Or D, apply for at least one additional credit card. I so much hope that you picked A, talk to a parent or guardian to help you with that payment plan. Today, we really want to thank you for your time. We hope that you really learned something from Setting Financial Goals presented by FDIC and Terry Boffman and Stacy Harner with Bank of the San Juans. Thank you all for attending today.
Thank you.